Howdy, y'all. Jason Andrews from American Realty, your local real estate professional. Are you wondering if the shifting market is a harbinger of doom or perhaps a moment of opportunity? Well, if you just read the headlines that are out there, there's a lot of negativity that's going on. This housing slowdown is here. The market is in a recession. The Fed's escalating fight is cooling off the market, and home sales fell nearly 6% in July as the housing market slides into recession. To steal a line from Tom Ferry, headlines often do more to terrify than to clarify. So I wanted to answer 5 questions for you guys that commonly come up with clients that are asking today. One, are home prices crashing? Two, are homes still selling above the list price? Three, are homes just sitting on the market? Are we in a buyer's market? And are buyers even looking at homes anymore? And to do this, I pulled data from the local MLS for the 4 major counties in DFW area. So Dallas, Denton, Collin, and Tarrant are the target counties that I pulled data from. The data starts in 2019 and runs to present. This puts the market, the current market, in context to what the overall market looked like pre-COVID. So it gives you a nice compare and contrast. So number one, are home prices crashing? They're definitely going down, but I think it's too early to say that they're crashing. Clearly, if you look at Dallas County, there's been a big dip. Also in Collin County, there's a nice dip. But the reality is Denton and Tarrant are kind of holding steady. Tarrant actually looks like it's gone up a little bit. So it's a little bit of a mixed bag, and it's going to be very local depending on probably even your zip code, your neighborhood. But clearly, across the United States and even locally, there is a decline in home prices. Personally, I think this is going to come out and that it will stabilize because I think realtors and people that were trying to sell their house were clearly still trying to reach in the past couple of months and not reducing their price or getting it to a more market sustainable price, which is leading to what looks like these dramatic price drops. But overall, the takeaway is houses are still clearly well above the 2019 and really almost any time in the pandemic, except for the earlier this year. So while it looks bad, it still is in a pretty good place overall. So the next one is, are home prices still selling above list price? And the answer right now is yes, that is still the case, that they are being sold above whatever the asking price is in the aggregate. However, this number is a pretty steep decline. I suspect that it's going to start hovering out around the 100%. I think agents are going to get better in convincing their sellers that they need to be at a different price point, which should ensure it's still coming in somewhere close to the 100%. May dip down a little bit below, but if you look at the trend, again, if we compare back to what was going on in 2019, I think it'll be a while before if we even do get back to this, because nationally, there has been a shortage of housing, and I think there will continue to be. It's just a matter of the feds have reduced the interest rates, or sorry, increased the interest rates, which is definitely tapped down on buyer demand because most people can afford less of a house now. The next one is, are homes just sitting on the market? I think the resounding answer to this is no, they're not just sitting on the market. While there is a tick up in the days on market, it's still below 20 right now. I think in the next month, it's going to go up a little bit more just from the anecdotal data that I've seen. But I think we're not on a track where we're going to get above 30 days anytime soon. A lot of this is going to depend on what happens with interest rates for the remainder of the year. So to be determined on this one, but as it stands right now, markets or the homes are still selling at a relatively quick pace compared to really almost any time pre-pandemic. The next one is, are we in a buyer's market? So there's a lot of different ways that people look at what is a seller's market, what's a buyer's market. Traditionally, anything under 3 months of inventory is going to be considered a seller's market. Anything really between 3 and 5 is what we'd call a balanced market, meaning that there's about the same number of sellers as buyers, and you can run through the inventory in about 3 months or 90 days. And then anything above 5 is really considered a buyer's market. We have not been in a true buyer's market in quite some time. Clearly, the very sudden shift from a very hyper and exaggerated, whatever you want to call it, crazy seller's market has put pressure on this, and these numbers are going up, giving buyers more control than any time that they've had since the pandemic started. But it's still very much what historically would be considered a strong seller's market at this moment. And last, are buyers even looking at homes? So this data is one of my favorites because what it shows is the how many showings, so how many people are going to an average listing. And the kind of story that it tells me is if you look at the pre-pandemic era, it was kind of a mixed bag. It was all over the map depending on the area, the county that you're in. And then the trend lines all kind of started following the same pattern. But what you'll notice here is really throughout the first part of the pandemic, it was pretty level around 10 to 20, depending on where we are, or 10 to 15. And then it spiked and it kind of came back down and then spiked again earlier this year and came way, way down really quickly. Um, so there's a couple of different ways of looking at this data. Personally, the way I choose to look at it is in this peak time here, the reality of it is there was so little inventory that if you were a buyer, you just went to see everything that had any possibility. So of course, the number of people that are going to look at a listing on average was very high because more people were funneled through a much smaller percent of properties. Now that more inventory has come on the market and there quite frankly are some fewer buyers that are out there, it's dipped down. Now, I think it's going to stay and kind of level out in this range. It may touch down to the fives on average. Time will tell on that. But still, I don't think it's going to get too much closer to what the pre-pandemic levels were going to be. The bottom line is still there's hefty appetite for people looking for homes that are out there. So, what are the takeaways from this? If you are a seller, we are really on the edge of a balanced market. Oh, sorry, ordered too many there. We are on the edge of a balanced market. So it does mean that while it's still a seller's market, buyers are demanding more than what they had been, where they were just writing crazy offers over, way, way over list price. Inventory is still historically low. So there are still fewer homes than there had been in the pre-pandemic levels. And then the market's shifting, but there's still an advantage for sellers, at least for the time being. I think it'll be a little bit, and again, I think we're headed towards a balanced market. So it's not all doom and gloom from a seller's side. But if you do think that the market is going to continue to go down, now may be the best time to choose to list with me. If you're a buyer, the takeaways are that there are more homes, which equals more opportunity for you. You're clearly in a stronger position on price and terms. In the height of the pandemic, people were waiving the option periods, were acquiescing to like no inspection or light inspections. There were no negotiation on any inspections. So it's coming back to the pendulum where you are going to be able to get some of the consideration that you would typically want or expect to get a house inspected, which we would always recommend. But that's some of the things that give you as a buyer more of an advantage now. And then we don't know where interest rates are going to go. So they could theoretically go down, but all indications have been that they're going to continue to go up. There's going to be some volatility with that. But the bottom line is if you need a house and you can afford to buy a house now, even if it's a higher interest rate than what you would want, when the interest rates do go back down, you'll be able to, you can refinance. But if they continue to go up, you're just going to kick yourself by losing out because they went even higher. Overall, I would love for you to connect with me. If you have any questions, leave a comment below. Always please try to subscribe as well to keep updated on any videos that I release. I look forward to hearing from you. Thanks.